Hey folks, welcome to the opening bell with Dan Frio. I, of course, am Dan Frio, and today is May 6th, 2021. I do that so you can timestamp what day we're doing the video. So today we're going to talk about the employment numbers. They came in good. Inflation scares again. The Fed is doing everything and anything they can to subside that. What's going on with cryptocurrencies and what's going on with mortgage rates and the bond market. So don't go away. We'll be right back. Okay, going to make this short and sweet. So far today, we had the employment numbers that come in, or the unemployment numbers that come in. The expectation was like 500,000. It was lower than that. The Fed, a lot of the Fed presidents. So there's a whole bunch of presidents, and then there's the main chair, we'll call it. The presidents are all coming in, and they're in unity, saying, guys, there's going to be inflation, but we know how to handle it. We'll taper it. It's only going to be a short-term spike, and it seems to be working in the markets because it's not spooking anybody. And then the cryptocurrency world is on fire. There's one particular piece of that puzzle that's doing very well, and we're going to get to that right now. So let's get on to what the broad markets are doing. So I always go to Yahoo Finance and CNBC for a lot of this data, and then I do a lot of more research on my end. So the reason why I do this is for entertainment and educational purposes for you, and to kind of help you think, saying, okay, I want to invest in stocks. What do I do? So I want to basically, this is like, say, financial planning 101. I'm just showing you the basics, not showing you high-end techniques or anything. And I'm going to go over investments that are solid companies or batches of loans, or not loans, or what am I trying to say here? A basket of stocks, how to invest in a basket of stocks so you don't stand the risk of owning just one particular stock. Like, let's say, for example, you want to own stocks in the oil and energy field. Well, do you buy Chevron, Exxon, or can you buy an entity or something that kind of spreads the risk throughout that entire industry? So that's what we're going to talk about. But right now, let's go. The headlines are basically stocks fall, NASDAQ heads to the fifth straight day of losses. Well, the good news is we just came off a record-breaking numbers on the Dow. They just hit record numbers, and they keep moving from there. So that's part of the headline there. Other news is new jobless claims fell to a fresh pandemic low. The expectation here was, I think, of 500,000. I'm going to go to that in a second, just to show you that. Go through here. I'm not even going to get involved in the politics stuff because it's like, come on, guys, just stop it. Let's worry about what we can do today to help everybody out. So let's go to CNBC. Bank of England governor warns inflation will be a bit bumpy this year, but no cause for alarm. See, they even have the whole world coming back right now and saying, just relax, okay? Another headline, jobless claims tumble below 500,000. That was the expectation. Talk about the coronavirus. So everything basically is the coronavirus, what the government is doing, and inflation numbers and employment. Okay, so the major news out is today, initial jobless claims. They were, for the forecast, there it is. We expected 543 new claims. 498 came in. Great. Tomorrow we're going to have non-farm payroll. Expected 978,000 new jobs. If this hits 1 million or more, you're going to see a nice little rally in the stock market. Unemployment rate, they're expecting that to dip from 6 to 5.8. So we'll see. Only time will tell on that one. So now let's go over and focus on our stocks that we watch. And this is basically a wish list or a watch list that I put together, and basically to go over with you guys some of the things that I watch, the stocks that I watch, in the batches or the pieces of the economy that I watch and monitor. Okay, so my staples are Google, Apple, and Facebook. Google is down or just flat. Apple's up 0.2 and Facebook is up 0.1. So now my thought process is, okay, let's think this through investing wise. The Biden administration is coming up with a plan, the infrastructure bill. So how can we make money off of this area? So you're thinking, if they're going to do an infrastructure bill, what's the components of that? They're going to fix bridges, railways, streets, utilities, piping. Okay, so let's go through this. So those are like manufacturing and production of stuff. How are things going to ship? They need fuel. They need coal. I know that's a bad word these days, but they need those components. So when you're thinking that, what would be a good play or a good investment for this? So what I'm looking at right now is the ETF or the SPDR. And again, what those are is a basket of stocks in specific sectors that I'm looking to invest in or at least study. So right now I'm looking at the XLI. It's the industrial sector SPDR, okay? It is up 0.16 right now today. But why? Okay, so let's dig into it. What are the components of this SPDR or ETF? Okay, again, an ETF, what this is, it's a basket of stocks. So in the past, there used to be you can buy stocks or a mutual fund, all right? Then all of a sudden, with the mutual funds, the differential there is, and I'll just make it in the simplest terms, why I don't invest in mutual funds right now. There's an ETF that is a basket of stocks just like a mutual fund. However, this trades like a stock. What I mean is I can jump in right now and buy this stock now, or I can sell it now. With a mutual fund, it doesn't settle till the end of the day. So let's say, for example, I want to buy a mutual fund. Well, once the day goes through, I can put it in place an order in at 1 o'clock. But what happens is at the end of the day, that mutual fund settles. They reconcile all their stock prices and everything, and it settles on a value or a number. At that point, then you can buy or sell. I don't like that because if I'm watching the market crash and crash and crash, I want out. If I'm seeing a huge rally, I don't want to have to wait till the end of the day to be able to buy. I might have missed 1, 2, 3 percentage points up or down in that wait period. So I trade ETFs, which is basically a basket of stocks that trade like a stock, and you can do it instantaneously. So let's go, when I do that with the XLI, what are the components or the stocks in this basket, in this ETF, I'll say. So we go through and we have Honeywell, UPS, Union Pacific, Caterpillar, Raytheon, Boeing, Deere, 3M, GE. These are the top 10 holdings. So you look at this, will all of these do well with this post-pandemic era we have coming, as well as the infrastructure bill? You bet, because things need to move. How do they move? United Parcel, Union Pacific. What's needed to dig up roads and dig up all this stuff? Caterpillar equipment. Boeing's going to do well because nobody's been flying for the last year or two, and then all of a sudden, there's a ton of orders getting placed. Deere, big manufacturing. What am I looking for? I'm at a loss for words today, guys. Equipment, 3M, GE. So you can see where I'm going with this. So let's see what's happening or what this thing has done over the last couple months or so. So we go to the returns that it's been getting. 1 month, it's up 8%. The last quarter, up 11%. Year to date, up 11%. 1 year, up 70%. Just think of it. In the bank, what do you get in your bank savings account? 0.001? You got 8% in 1 month in this stock. Okay, annualized. Let's see. So if you have an annualized return over a 3-year average, 12%. 5 years, 14%. 10 years, 12%. Look at that. You imagine getting 12% a year for 10 years? Okay, you can have stocks that'll, they're up 50% this month, but they're so volatile. Look at this volatility. It's really not there. You're getting, on average, 12% a year average over 10 years. That's fantastic returns. So that's the area that I'm focusing on right now and adding to my position is the XLI. And the reasons being is exactly what I laid out. Now, what's going on with cryptocurrencies? That's another hot topic. Right now, Bitcoin and Ethereum are the ones that I hold positions in. I sold part of my position in Bitcoin Cash the other day. And then ever since that, it's rallied. I sold on Monday. And in the last 7 days, it's up 60%, in the last 24 hours is down 10%. That's fine, because I got a big gain there that I'm taking anyways. But Bitcoin and Ethereum, right now you're hearing the buzzword of Ethereum. A lot of people don't understand what Ethereum is. Ethereum is basically the platform that you use to buy Bitcoin. So people that are buying Bitcoin and a lot of these other cryptocurrencies, they use the Ethereum network to buy it. So as the popularity and everything on all this stuff grows and grows and grows and grows, you can't buy it unless you use the Ethereum network. So think of it, you want to buy something on from Amazon. So you go to Amazon's website, okay, and it uses the internet. That you have to access the internet to buy an item on Amazon. So if you want to use Bitcoin, you have to use the Ethereum network to buy it. So every time there's a transaction, they're going to make some money. So the more volatility in these, either buying or selling, doesn't matter, because when you buy and or sell, they're making a commission or some money on every transaction. Doesn't matter if it's a buy or sell. So as the popularity keeps growing and growing and growing on all of this, this value is only going to keep going up and up and up. And look, it's up 25% for the last week and 5% in the last 24 hours. Okay, so those are the ones I focus on. So I would highly do my research on these two. But right now, Ethereum is my play, and I've been telling you guys, for the past 6-8 months, this is my biggest position that I hold, and it is tearing it up right now. It's up over 600% this year. Okay, so now what's going on with mortgage rates and the bond market? Well, people follow me every night for this number right here. This is the MBS market, mortgage-backed securities. It's the bond that trades on Wall Street that is the component or biggest component in mortgage rates. It's not the 10-year Treasury. It's not the S&P. It's not the Fed. It's not the federal funds rate. It is the mortgage-backed security rate or price. Yield. God dang. I got a cold, guys, and I've been taking Sudafed, so I don't know if that's affected me. But, so we've had a nice rally. So as this number goes down, rates go up. When this number goes up, rates come down. Look where we've been for the last couple weeks. Nice. Really nice trend. Okay, today we're in the red. But what I like here is these are Fibonacci levels right here. These two lines that go across, these usually create, or are supposed to be, create a ceiling and a floor when things trade, or when you monitor pricing and trends of things. So it's going to go up and down and up and down, but it should stay in this pattern. The cool thing is we broke out finally from that pattern right here. We hopefully today will close above this, which now would create this Fibonacci level to become, it used to be the ceiling, but now is going to be the floor. So we have potentially two more areas right here, or resistance levels that are going to be created, or it's going to create now new ceilings. So now we have we can dip down and we'd be right here. So our downward momentum normally is only going to take you to about right here, but our upward momentum can take us to here or here. So again, as this rallies up, rates come down. So I'm only seeing rates modestly changing to the up or the down. But there's a better chance of rates dipping just a little bit right now than there are of them going up. So that's what's going on right there. So I hope you like the video. If you do, all I ask you to do is please give me a thumbs up. But check out my channel, The Rate Update with Dan Frio. I'm a mortgage advisor, a mortgage person. I've been doing it for 33 years. I would love to help you refinance, buy a house, get pre-approved, or even analyze the mortgage situation that you're currently in. If you're in a forbearance, please, those are the people I'm begging to right now. Don't stick your head in the sand. Get an exit strategy to know what you need to do once your forbearance is up. So God bless, guys. I'll see you today at 5 o'clock with my rate update to let you know what happened today with mortgage rates. So see you then. Bye-bye.